Hello and welcome back to another daily dose of insights powered by Container Exchange. We're back after a short vacation-induced break, and I'm excited to be hosting these daily dose of insights again every Monday, Wednesday, and Friday. Today, we have a couple of points on our agenda. Let me just quickly share my screen. Give me a second here to give you a little bit more guidance. Most of these topics have been in high discussions over the past couple of weeks. So we have, especially at the US West Coast, significant labor disputes currently ongoing in all of the major trade gateways into the US, which induces congestion on the Trans-Pacific. And effectively, that is good news for carriers in the end, because it absorbs effective capacity from the market, and the market suffers from overcapacity at the moment. So this serves as a means to bring supply demand a little bit more into balance and should help to support freight rates. That's at least the theory. Let's see how that plays out in the midterm. The labor disputes have already been ongoing for more than a year now. The White House is being urged to step in, so escalations are really cooking high, and now we will see how this is being resolved. Then on the other side of the Pacific, we have worrying news coming out of China. The China manufacturing PMI continues to trade in negative territory or below 50 points, signaling a contraction in manufacturing activity. We also see trading activity in May, the latest numbers being on a downward trend. So compared to May last year, we see a contraction both in import as well as in outbound volume or export volume. Then back again on the other side of the Pacific, in the Panama Canal, you might have seen this in the news lately. Panama Canal is suffering from water shortage. So there's a lake pretty much in the middle that has worrying water levels or suffers from drought, so that the Panama Canal authorities are now warning of disruptions to trade activity and vessel throughput. And also initial carriers have announced surcharges for transit through the Panama Canal. So very, very important to keep that on the radar, because if you have disruptions on the US West Coast because of labor disputes, and the Panama Canal, which is then the most important gateway to the Gulf ports and the Atlantic coast ports of the US, you really have a problem on the US side in terms of imports, especially now with Q3, Q4 sort of coming up, peak season ahead of us. This needs to be on high alert, or traders and carriers need to be on high alert. And then lastly, very latest news also from Zeneta. We've particularly always looked at spot freight rates, which have bottomed out at the moment, at least from what the trend looks like. On the other side, you have contract rates, long-term contract rates being negotiated and coming into effect now as of May, June this year. And you see that long-term rates continue to drop. I don't think this is a surprise, both in terms of the lag of contract rates behind spot rates. So spot rates are always a little bit more ahead of the curve, and contract rates then follow suit. And you have seen the sort of bottom in spot rates 3-4 months ago, or beginning of the year, end of last year. And now this will also play out on the contract side, especially as more and more vessel capacity is coming into play and supply demand is still very much out of whack. That's it for us for today. Thanks a lot for tuning in. Have a fantastic rest of the week, and see you all again on Monday, I think. Take care.